You are watching Market Watch, the brief overview of the key events from the world of finance. The main Wall Street indexes, the S&P and Nasdaq, on Thursday recorded the largest one-day losses in 2 months. However, shares of Amazon and Intel rose significantly after the publication of the reports on Thursday, despite the decline in the value of Apple shares. Given the upcoming U.S. presidential election, tension is building in the market. Volatility indicators are at their highest levels in a year, and the yield on 10-year U.S. bonds has increased, despite the beginning of the Fed's interest rate cut cycle. On Thursday, the U.S. Personal Consumption Price Index, the main inflation indicator for the Federal Reserve, showed an increase of 0.2% in September, in line with analysts' expectations. Annual core inflation was 2.7%, slightly exceeding forecasts, and consumer spending showed growth above expectations. As a result, market participants remain confident that the Fed will cut the rate by 0.25% at the meeting scheduled for November 6th to 7th. Meanwhile, the VIX Volatility Index, often referred to as the Fear Index, has risen. Investors and traders are preparing for increased volatility against the background of upcoming company reports, the November 5th presidential election, and the U.S. Federal Reserve meeting. At the same time, oil prices continued to rise on Friday, increasing by more than $1 per barrel and offsetting weekly losses. Oil prices are supported by expectations that OPEC Plus may postpone the planned increase in production volumes for December to a later date. According to sources close to OPEC, the postponement may be announced as early as next week. The decision is due to concerns about weak demand and rising supply. Nevertheless, oil ends the week with losses of more than 1%, having failed to recover from a 6% drop on Monday. And now to the crypto assets. Bitcoin did not have enough conditions to overcome the historical maximum. The general uncertainty before the upcoming elections in the United States plays a role, but in addition, the dollar was supported by a large-scale decline in stock indices in the United States. Quotes have declined, but the relatively wide $66,000 to $69,000 zone acts as support, which may give a chance to a new wave of growth. Nevertheless, if the price manages to overcome it, significant movement targets may be located closer to $61,000 to $60,000. When planning trades, it is necessary to take into account the likely volatility associated with the publication of news scheduled for Friday in the United States. That's all I have. Follow the news carefully and be prepared for all the surprises of the market.